Hello, everyone. Happy Monday morning. How is everyone doing? Hope you all had a fantastic weekend. Earnings keep chugging on. Not much in uh, the calendar, the economic calendar until at least Thursday, Friday. August generally a slower month. Good morning, Patrick. Good morning, Christoph. Is a slow summer market ahead? Well, August is historically a slower month. Uh, and then we go into September. The big thing in August will be Jackson Hole, which is at the end of the month. I think it's around the 24th. The Economic Forum, where you get the key Fed speak, which is essentially to me the way I'm looking at that, and I'll just go into it now. I'm looking at that if inflation picks up and we got these CPI numbers. I know that's not the main thing, but the CPI numbers are still somewhat important. If we get CPI numbers still picking up, PPIs picking back up, we got the PCEs picking up. Essentially, you could look at Jackson Hole as a Fed meeting because we're pretty much in the middle between that July and September. A Fed meeting where they can't. It's definitely a pause because all they can do is talk. So, if inflation picks back up, I could see the technically Jackson Hole being the pause. And then if they need to hike again, the hike in September, a pause in November, then a hike in December if it keeps going. So that would be if those are needed. That's how I would view the schedule. Oh boy, so that's where that sits today. We've already had Bostic and Bowman speaking. All we really have is a consumer credit change. Tomorrow we have again more Fed speak, and they're sending mixed messages. They were talking on Friday, well, pause, and then over the weekend, well, looking like we might need to hike. They're just trying to keep the markets on their toes and not committing to anything. Tomorrow we have economic optimism numbers, but again, Wednesday crude numbers and mortgage stuff and mortgage rates. Whew. I was looking over the weekend just out of my own curiosity, and I was seeing mortgage rates at 7 point. I think it was 7.39 around here. Core inflation is Thursday, so that's going to be the big one. And then we have the jobless claims, and then we have more Fed speak after the CPI numbers come out. Then Friday is consumer sentiment, preliminary numbers from August, and PPIs. We remember we had that pretty big Friday was ugly. We got that bounce intraday, and then right around noon Central Time, massive selling, massive momentum bars, carrying it into the close. Today we're getting the bounce back, a really ugly close on Friday, and we'll get to the charts in a second. But a bounce back, I'm at least this is going to be the secondary reaction. Whether it happens today, how long it carries through, is going to tell us a lot about the market coming up in the next couple weeks. To answer your question, Christoph. So I'm not going to comment. I am watching for a bounce, but then this bounce is what I've talked about, the secondary reaction. And we're going to have to get some, if you're looking for short term, more bullish upside, this bounce is going to tell us what the potential of that is. You see, everything this morning is positive, with consumer cyclical comm services, real estate technology leading higher. So it definitely looks like a bounce is already in. And here's what I was talking about with the meetings. We have the next Fed meeting is on the 20th of September. We have Jackson Hole on the 24th of August. So it could go pause from Jackson Hole. Technically, they can't do anything but talk because it's not an official meeting. September, hike. November 1st, pause. December, if necessary, hike if you're looking for one or two more hikes. And right now, the market has priced in the cut after for March. But that's really, the market is not pricing in any more hikes. Fear and greed, we've back down to, still in the upper 2/3 of greed mode, but out of extreme greed. We're going to have to see how far this falls back. Oh, look at that, ticking up. Oh, by the way, new version of Futures Edge dropped this morning, and the other models are still very overvalued. Even interest rate model is getting to the point where it could kick into overvalued. So the markets on different levels are pretty overvalued, and the Schiller PE is still highly elevated at 30.89 even after Friday's sell-off. Now, we had Tyson. I know people are cutting back on chicken and on beef and pork and rotating into chicken. Uh, Inflation is starting to hit. Inflation is starting to hit people harder. It's stayed elevated for so long, and food inflation is still not going away. After close, we got Palantir, Lucid. Those are and Paramount. Those are about the big things. There's not a lot that's going to really move the markets, but there's UPS, depending on what their view on the shipping is, could have a little ripple effect in the market. But they're tomorrow morning, so keep that in mind. But there's not a single company that's really going to rock the markets this week. We had a lot of that come out last week. So, good morning, Connor. Hey, Jacob. Good morning, Heinrich. All right, let's start with take a look big. This had the levels. Let me pull off this other stuff because I remember I was using those on pullback levels, and oops, not that one. This one. There we go. Pulling back to the key zone with the weekly rotation zone. So this was the level that has to hold. If we start getting a close below 44.70 on a daily basis, not good. Then I'll be watching for a closer pullback to 43.50 to 4400. This was a very negative week. This was not an outside key reversal on the S&P, but it was on the NASDAQ. But any week that closes on the lows is never good after breaking some major support higher. And you see Friday's price action. This was just ugly. There was Friday, and then massive selling. So I am watching for the bounce here. Let me take off these levels again. A key for if this bounce is going to continue and we're going to retest the high areas, most of you know what I'm going to do. I need a close back above 45.81.75 for a sustained move. Higher before that, we have this breakdown area. So if we get a multi-day bounce, the key area I am looking at, here's the breakdown area. You see right here, prior support becoming resistance, and that's right at the 50% harmonic. So a key target, if we can get more than a 1 or 2 day bounce, could be 45.65 area, and then 45.81 on a closing basis. If we don't even make it back up there and roll over, we've got a lot of weakness. We start breaking here. My target's the downside. Again, it'll be Friday's area, 44.90, which we talked about last week. We bounced off on Friday, that 44.90 to 4,500. Then minor target for me is 44.72 area, and then it would be a return to the 50, which is about 44.45 to 44.50. Those are the targets to the downside that I am using. And then I start doing harmonic projections. If we're looking at the minor, if this pausing bar holds, then I'll use these projections to fine tune. Let's just make sure that pausing bar is going to hold. All right, but again, we could be going, and remember, this does not have to immediately go break out to new highs this month. We could end up something like, hey, a sideways of the April-May price action before we either break out or roll over again. Also remember, September is, on the historical basis, the worst performing month of the year. It's not October, it's September. Also, please keep that in mind. So if this can't make a lot of headwind during August, we could see a break lower into September and the first half of October. That's where I like to look at where volatility is priced and potentially buy protection, portfolio protection, which we'll get to in a second. NASDAQ was an outside key reversal, so last week higher high than the week before. lower low, closing below the prior week's lows and closing on the lows. Coming back finally to the rotation zone area. Still sort of channeling. So on any bounce, the first area I'm still watching this last little, not from the highs we made back in July, but this last little thing in 15,700 is key for me in the short term. The breakdown area is back at 15,550, 560. So that's at least my minor target to the upside. We get above that, then I'm using 15,628, and then there's 15,700. To the downside, the key support was this breakout level, which we hit on Friday, just closing slightly below it, but so far holding today. And if we did break lower, let me just see, because we have the pausing area. The next minor thing I'd use to the downside for the NASDAQ would be 15,258. The next major one would be 15,180 to 15,160 to 15,180. And then we have the 50 coming in. Remember, there's still a fair amount of support in this market below. Now we start getting some key closes into the rotation zone. For both the S&P and NASDAQ, we could then start getting the bigger pullback. But that's why see how big this bounce is will be key. The Dow, which did have a valid double top, tried to spike up on Friday before coming down. This is close enough for me for a stop raise. Going to be watching the Dow, though. So I'm just going to use the stop raise levels at this point, which the key target for me would be 15,435 to 15,480. Then on a closing basis, 35,571. Still watching, though, for more downwards price action on the Dow after this bounce. Russell is not. No, this is way too sloppy for a head and shoulders. The minor levels I'm using are 1950 for the Russell, and key resistance is coming in right about 1988 and then 1995. I'm keeping an eye on the VIX. Why? We've broken. Now remember, a lot of this rally was also fueled on from the volatility funds. With this selling volatility got super depressed, and they sell volatility and use the money to buy stocks. If volatility starts making a higher range here, that's why I'm really paying attention to right now. First level is 16. To see if it holds, if it pulls back and stays slightly elevated, because then we could get into the reverse, some unwinding of the vol funds in the short term, which would be buying back in some volatility and selling out some stocks. So keep that in mind. If we collapse back below 16, it would really take then a close below 15 to really get back into the low vol range. That's why I'm paying very close attention to the VIX over the next few days. Which time frame do you look for a close above the 62.5? I will want a minimum of the 4 hour, preferably the daily. It also depends how it gets there. But don't go out of a 5-minute close above the 62.5. At least use a 4 hour with these markets. It has to show that we're getting some sustainable move. You know, remember, the higher the time frame, the more important the close. Like a weekly close is more important than a daily close. A daily close is more important than a 4 hour close. The best time frames are 4 hours and above for key closes. DAX, I'll be watching for a bounce and then a roll over also in the DAX. Is there any great bottoming pattern? No. This is just a sideways, but it's now any bounce would go into key resistance, and that level would be about 16,100. Notes, we hit the 87.5 again on Friday. This was a level we've talked about, and we hit that and then had a strong reversal off of it on a Friday. I'm getting more so to where notes, even if we retest the Friday's low area, We have a lot of support coming in here. So it's hard unless the Fed starts getting really hawkish to get overly bearish on the notes, which is bullish on the yields right now, unless the Fed gets overly hawkish and they're sending more mixed messages. Now, this still is a valid potential double bottom, and that's the only things that would shift me bullish on the notes, bearish on yields. And look right where that 200 is, right at the peak. Other than that, there's nothing great setups today. It's more like sitting. Let's see how this little bounce plays out. Again, the 10 years coming back to key breakout support. This is going to be interesting to see if they hold this support. If they don't, then we could just go into more of a choppier back and forth. We hit the 87.5 also on Friday. That was the 87.5 from the highs in October to the lows in April. And you see, remember we closed above the 62.5, kicking in the 62.5 or the 87.5 rule, and we spiked right up there on Friday and then reversed. That's why learn harmonics. I'm telling you. Dollar index after the run up, pulling back, finally got a breather, spiking down to the lower end, but then closing above. So I had two key levels. Closing above there, testing this 101.60. What's key for this dollar, at least in the short term, is this 101.30. Just go 101.30. Because we start breaking below there, especially with a close, then I'll start watching for more of a consolidation / bigger pullback. If we can break above last Thursday's high, 102.85 area, then a return to the 200. Crude, this is still barely a valid potential double top. By the way, in the podcast that just dropped, you'll get to hear our thoughts on crude, but this is now basing. The only thing that turns me at least more short-term slightly bearish, and that wouldn't even be long-term bearish, it's against the rotation zone still, and that would only be returning possibly to $75 a barrel, but we're a long way off of potentially triggering that. If we break right now, we came up to this area, pulled back to support, retesting the key resistance area. We break above this. Now that gets interesting for inflation. And then the next target would be 86. So I'm watching, as long as we don't trigger this double, watching for us to base somewhere up here and then potentially take that out. Gold, not much. Not much to talk about with gold right now. Still watching for a rollover play in gold. Silver that completed a double. Still watching to see how it reacts to the 200. Where else do we sit? The Japanese 10-year still holding elevated. 62 basis points. Still above very key support. So that's not coming back in much. But it's quieted down. The only thing that changes my outlook on the yen is if we triggered this double top, which is still valid, but albeit choppy. Euro, again, same as the dollar. Going to see how it responds the next couple of days. In my book, there's not a lot of great setups right now in the euro or the pound. Bitcoin has gone absolutely to sleep, and something weird is going on. I think a shoe is going to drop in Bitcoin coming up soon, but there's not even a technical pattern. What else do we have? Spiders. Spideys, which, again, closed out. Key reversal in the spiders on the daily. Not on the weekly, but a weekly is closing the lows. The key area for the weekly, if we do pull back after this bounce, is still 443.81. Right now, key resistance, we're trading 448.62 pre-market, 451.50. If we want to flip this around, assuming these lows are going to hold, let me take off the short term. Actually, I'll just bump this up where we have the key pausing area right now. If we bump this around The key closing area on the spiders, and this for me would be a daily close for Christoph. And I know you're more of a futures guy, but if you did look at the chart, 450, 470 on a daily close for this. Oops, nope. 450, 450 on a close. Other than that, we have 451.55, 451.21 to 455, 451.55, 452.85 area, which is also right around Friday's high. We do have a gap left behind, but that's where I'd pay attention at 450 before even the gap fill. And on the Qs, still holding the downwards channel, roughly 374 pre-market. 375.60 area is the first area of resistance. Then I would be watching Friday's high coming in at 378.10. And then, let's see, we have a significant level right about there, 379.15. The key support, remember we filled the one gap, but if we start breaking Friday's lows coming in 371.50, you have another gap fill, and that would be very, very bearish on the Qs. That would be to 368.17, but on a closing basis, 368.99, then we could see some continued downward pressure. You're welcome, Christoph. Tesla and softening up that 50. Going to be watching for that to break, and that really gets, and then I'm watching for any rallies to be sold. Any rallies to be sold, and I'm actually now watching for Tesla over the next while, unless it can really do something weird. I'm watching for it to reconnect with the 200. Before that, we have lots of gaps left behind. And we start breaking below these lows from June. Next target would be 225, then 207.50. NVIDIA, still just a little flagging channel. NVIDIA, I'm going to use it from the high. It has to get above. I'd be using 457 as a key target at the upside, but on a closing basis, 463.25. And you see where that's lining up with the top of the channel, and that would have to be a daily close. So that's where that all sits. All right. All right. Again, after the close today, we got Palantir. It's really key. Let me move this trend line. It's really key. If it starts breaking back below 18, that's not good. Then I'd be watching for the bigger pullback starting in Palantir. That's very key support right now. Very key support. Sorry about that little technical glitch. With that, hope everyone has a wonderful trading day, and I will see you all back tomorrow morning. Bye for now.